So, hello, and a massive hello to everybody. Hope everybody's having a great day wherever you are, whatever you may be doing. This is 50 Pips, rocking and rolling here, 29th of December, 2019. No trade calls, no recommendations, or response for their own stuff. We're here for educational purposes only. So, what's happening as we're going towards the back end of the year? So, what's happening next week? So, we have on the 30th, we've got a full day trading, which is main thing out is going to be the Chicago PMI. On the 31st, it's also full day trading. A lot of people mistakenly think it's half day, but it's a full day trading. And the main issue on the 31st is going to be China data and US consumer confidence. Then on the 1st, Happy New Year. The markets are closed. That's the day I will publish the 2020 themes video. So look out for that. On Thursday, which is the 2nd, we'll be back in full swing of things pretty much. I mean, the real vol and everything will come back next week, which is the first full week. But, we should start to see some action on the 2nd and the 3rd. And that's why the weekly webinars start again on the 2nd. On the 2nd, we have a lot of China data and the PMIs. And on the Friday, we have the ISM. We have crude oil inventories, and we've got the FOMC minutes with quite a few speakers. So what to look for into this week? Really, this is still a little bit of a funky week. Still the first part of the week. As I said, the full volumes and everything will start back the following week, but still there's plenty to do. Our three themes here were A, stocks higher, 2, euro higher, 3, gold higher, right? So all those have played out here quite nicely, and if sooner or later we get some kind of a pullback in the equities, then that should only help the euro higher and the gold higher theme. This is not the last one, but if you see it essentially, once again, what have we got? We've got the market that is in this melt up phase in the end of the year, and you've got this fear and greed, right? Really pumped up. You remember 1 year ago when the world was crumbling, it was at lows, but you see how high the reading is where there's actually no fear and the market keeps up melting higher, which is quite normal into year end. And if you look something at like what Sentiment Trader puts out, essentially here, another interesting thing was that last year, right at this point, we had what was basically extreme pessimism in the market. And right now, as we close the year, we were at extreme optimism. So, some kind of a pullback would make sense. And that should only help that gold and euro trade, right? But really, the things as we come into this week, as we've talked about, we like selling that end of the week, Thursday, Friday ramp, because we would expect stocks to be weaker into February, right? As we start into February, as we see profit taking, as we see the final pump into year end, then you see some profit taking people taking who don't want to take profits because of tax reasons will dump them at the beginning of the year, and less Momo comes in towards the back end of the year. So that's interesting. The other thing which I'd want to say, even though broadly speaking, we still look for a stronger euro, a word of caution, because as you know, as we've talked about, we'll talk about this again, but basically January tends to be overall a weak month or the worst month of the year for euro. So it may be an opportunity here as we go into year end and early Jan to take some profits on those longs we've been riding, to then reload them as we get closer to the end of Jan, depending on what happens, right? The other thing is also keep in mind that our bullish metals play going into this is a trade we take every year, especially with respect to gold. And you see here, we're going to be going into this bullish period, best 2 months of the year for gold. And also remember, our base case all year is being that when this gets going, silver is going to outperform gold. And you see here that, once again, this Jan-Feb period is very, very bullish for silver seasonally, and also in terms of copper. We discussed at the back of the year, and you see here we go into a very, very strong stretch, a 4-month bullish stretch for copper seasonal. So all these things are really playing in line with what we had discussed. So really, there should be no big surprise for us, right? No big surprise in terms of these things playing out. Now, the other thing which you want to keep in mind in terms of seasonals going into January is also crude, right? Crude, as we've discussed, also similar to copper, goes into a fairly bullish stretch. So this is going to be very interesting coming from a back of the year, which tends to be heavy. Now, we've had a very strong back end of the year. We'll look at this in a second, but this is another thing you'd want to keep out in mind going into the beginning of the year, is that bullish seasonal. Now, one of the interesting things as we go into January, I know we still have 2 days, but since this video will cover the first days of January, we'll talk about this in the next video too, but a lot of people will start to talk about the January barometer, right? What does that mean? So the January barometer basically is that since pretty much the 1950s, every down January, right? Every down January has without fail signaled one of 3 things, okay? Number 1, the start of a bearish market, the start of a prolonged bear market, right? Number 2, a flat year. So meaning a year where no matter what happens, the market doesn't really get any traction. Or number 3, a 10% correction could mean that the market even ends up on the year, but that's, so this is what they call the January barometer, right? So this looks at the full month. Okay, so I'm going to go through. People tend to get confused here. So this is the full month. So how the month closes is going to be extremely important, right? Second of all, what we have is, let me do it a different color, is what people call the first 5 days. And this is a different thing. So this other thing says is that basically if the S&P closes the first 5 days positively in the green, what we've seen is that 82% of the time we end up closing a positive year. The year tends to be green. Now, that could be by 1%, that could be by 2%, it doesn't matter. But it's a bullish signal, okay? Now also, and this is something we'll cover in more detail in the 2020 outlook, we're going into a election year with an incumbent president, so that also tends to give us a bullish slant. But there's 2 separate things if you see people talk about that you might see people talking about, and one of them is going to be the January barometer, and the second thing is the first 5 days. And they're gauges people take to get a feel for the market. But again, I find they're interesting, but sometimes they can be misleading because a lot of things can happen in between these things. Okay, so that's the last thing you want to keep in mind, but we'll talk about it more in the 2020 outlook. Now, going back to the main charts we usually look at here. And again, on Monday, Tuesday, things could be very, very funky. So I'm not going to go into too much detail on specific Forex pairs, for example. But here, what we've got is the ES. Remember, our final target was this 3280 to the upside. And we're a little bit shy, and we put in this negative close on the daily. Now, keep in mind that we are extended off the 200 DMA, but we've been far more extended recently. So it's not a crazy sign. But again, what we would expect is that anywhere here into this 3280, we think we're going to have a healthy retracement and a pullback. Now, what is our base case there? It's a little bit early to tell, but off those highs, we would say at least we'd get a 3 to 5% correction, and possibly, depending on how the beginning of January goes, 8 to 10%. Okay, so our targets here to make it easy on possible corrections will be: one, if it's a smallish one, at the minimum, we'd expect to see a move back into the 50 DMA. And if we get a little bit more traction in January, then we would expect us to go all the way back into the 200 DMA. But this is what we're playing for now. If you're still long, I would have flattened up into that spike on Thursday, Friday. But if you're still long, as far as I'm concerned, I would be positioning to get flat or short for 3 to 5 or 10% corrections, call it 5 to 10% correction. And then depending on what's going on, what the context is, to get back long, because this year should have a relatively green tilt. But we'll discuss that in a little bit more detail. But that's our outlook on equities. Now, what's going on the bonds, on the ZNs? ZNs, you can see they're holding this key level. So our base case is, as long as they can hold here, this is holding this whole rotation higher, and we're going all the way back up into those 131s, etc. So this is extremely nice risk reward, especially if I know some of you guys have started to get long in the last days of the year with stop on a day close below this 200-day moving average, looking for this to come all the way back in and to resume the bull trend. We'll discuss the bonds a lot in our 2020 outlook, but if we lose these lows here, then I wouldn't be surprised to see us come back all the way into this 126, 125. And at that point, I think that would be a little bit of a gift, depending on the context, because all things being equal, you would expect bonds to stay bid, rates to stay low this year. So either it goes up from here or we get a chance lower. Now remember, because of the way a lot of these funds are trading, because of these allocations, because of these weightings, because of risk parity, if we get an ugly liquidity event on equities, you'd expect to get, at least for a short period, you'd expect to see the market sell everything possibly, right? Sell bonds, sell stocks, sell gold, just sell everything. Okay, so that's something we might have to deal with. We'll see what happens down the line. If you look at gold, again, our base case was to see a rotation higher for a base build into the end of the year. And you see it's very, very similar on the silver futures, right? We build that base. So again, nice little base build, and our base case assumption here is that this is going to try and go all the way back into the 1550. Any dip for me is a buy. This should trade strong and bid into January, February, then we'll reassess, but our base case is still this is going to rotate higher. If you look at crude, what is happening on crude? Well, crude in the back end of the year, which tends to be bearish, it held a very strong bid tone. So we'll have to see what happens here. And as we said, we're going into a bullish seasonal stretch. But I wouldn't be surprised still if crude stays stuck inside this 62.50, 60 and 50 to the downside. Now, anything can happen, and if we get a break above the 62.50 and if we get a day close above, I think the play is to try and play it for a press back into the 70 mark. But I really wouldn't be surprised if we stay the whole year range bound once again without too much movement. Again, I'll trade the technical. So above 62.50, I'll be looking for 70 to come into play. But any failure here, I'll be looking to come back into a lot more neutral territory, something like the 55, or at the very least back into all these moving averages. Okay. Now DXY. What's going on in DXY? Well, again, DXY, we've been shorting this all year, pretty much all those spikes and all those failures. And if you remember, we looked at this move back off the 97 into the 200 as a sell opportunity for lower. And you see that the market is trying to press it. So even here, any kind of rally, should we see a rally, for me as a sale for a move back into the 96. Bigger picture, we'll have to see what happens, but we wouldn't be surprised to see this trade much lower. But at the very least, our base case is for that 96 to trade, and we'll have to see, we'll discuss this a lot more in the 2020 outlook. Remember what we said, the moves can extend into end of year. The pain trade will likely continue. Bam, Aussie higher. Remember, we detailed why this was not this was not the same pattern which led us to be short. This test and this test for us were not shorts, they were more longs for this break. Similar action on Kiwi. The pain trade continues as the liquidity dries up into the end of the year. Also, what did we say? If you guys remember, we said careful, because the break above the 65 can be brutal for a move back into the 200, into the 69, 69, 70s, and that's also in play. And also the same thing with the euro breaking higher and making a very, very nice move back to the 112. This is very, very key zone. I still think if we see any kind of selling at a move back into the 111, 110.50 for euro, that's going to be a buy for this ultimately to continue this move into the 114s, 116s, 118s. As far as cable is concerned, there's not a lot that's changed. We've still got a lot of wheeling and dealing, and here the market has to reprice the latest from Bojo. What we said is any move back towards the 128 would be a buy. We still expect it to stay fairly neutral here. I wouldn't expect it to move too much off this area until there's more clarity. But if Bojo delivers the way it looks like he's going to deliver, this, which is essentially the 50-week moving average, should hold, and we should see this ultimately try and complete into our 138.40 targets. I have no position here on cable. The only positions I held over the holiday was long, are still have long euro, short yen. Those are the only positions, and I'm still holding those. I would not be surprised to see yen into the beginning of the year have a little bit of a slip and trade lower. It tends to do that. We've discussed that in the past too, but that's pretty much where we are. Tomorrow, and so 30th, 31st, you could still see funky things. I don't consider those to be normal trading days. As far as I'm concerned, semi-normal is going to be the 2nd and the 3rd, and then next week we go to full normal trading. So guys, wishing everybody all the best. Happy New Year, and heads up for me because you'll get a video on the 1st. Okay, all the best. Take care. Bye-bye, guys.